What do you think of yesterday's big rally?
I thought it was pretty, very happy to be a part of it and observing it all. I think it's really a confirmation. We've been seeing the small cap stocks come out of their correction and hit new all-time highs. We've seen the Nasdaq do the same thing. And I think slowly it's pulling the large caps. We're about less than 4% away from the all-time high. And I think investors are saying, you know what, we can put this trade stuff on the back burner. Let's focus more on earnings, which are expected to be very strong.
Now, this earnings season sets up very interestingly because the downward revisions going into this season have been minimal compared to the past. And the expectations for earnings season are a little bit lower, obviously, for the second quarter versus the first quarter, just because the growth hasn't been as strong. Last quarter, earnings was not a catalyst for the stock market. Why should we be different this time when it seems like the setup is also very different? I mean, it looks like we could actually maybe miss expectations because they haven't been taken down as much as they normally have been in the past.
Well, I think first off, investors were wondering why is it that we have fallen into this correction. We started expecting the first quarter to be up 16.7%, and as it's done in each of the last 25 quarters, actuals exceeded estimates, and we were up 23%. So I think investors were worried about, is this a peak quarter? But now expectations are about a 19.5% gain for the second quarter. 90% of the companies, granted that's a small count, but 90% have beaten on both the top line and the bottom line. And what we're seeing is investors are reacting favorably to this. So I think what's happening is that investors are saying, you know what, maybe we should be paying more attention and that we should not be worrying about a peak.
Kari, yeah, I was going to say, just to build on that, no matter how good numbers are, no matter what the beat rate is, no matter how the market rewards it, it probably isn't going to end this debate as to whether, in fact, we are at a peak in terms of momentum and where we are in the cycle. So where do you come down on a lot of that?
So one of the things that we find most positive about the news recently is participation rate of the labor force. So we added 600,000 people to the workforce who previously were maybe sitting at home watching Squawk Box. And we are still well below the peak of the labor market of workers from 2000. There was 11 million short of that level. So if we can stay at a 4% unemployment rate and keep adding people into the workforce, that will keep wages at a reasonable rate of increase, 2.7%. I think we can handle that. We can keep growing and not worry about whether there's a recession around the corner because of shortages, real shortages in different labor markets, and also very high inflation rates. So that was encouraging. And in terms of earnings growth, you know, we're having a very good year. Next year, we're expecting a 10%. I think 10+% people are using. Those are decent numbers. And if we can get that.
It does seem to hinge on 2019.
Of course.
Whether the 10% starts to look plausible as we get closer to it.
Of course. You know, but people who've been sitting on the sideline for the past year, who've been saying we're near the peak, I think they've missed a lot, right? They have. Market was up 21% this year. I mean, last year, it's up 5% roughly this year. And, you know, we're just starting July.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.